Hello everyone, Nnael here. I hope you always be happy and healthy. Okay, so I haven't uploaded any video yet since about maybe 5 days ago. I forget. I've been busy, so yeah. I hope you can watch my video before this, and by watch the by watch those video you can have an insight about where are we now in our technical analysis for Bitcoin price. So yeah, let's review again from the first from the start. So today I'm going to share my outlook for Bitcoin price technical analysis using Elliot Wave Theory. So in this technical analysis, I'm going to share a bearish outlook and a bullish outlook, both with a different scenario. So yeah, let's get into it. Okay, first we are now in a daily time frame. Here we have a bull case scenario first. So in the bull case scenario first, in the daily time frame, I have separate one to set up wave, primary one to set up wave in a daily time frame, which is we have the complete 5 intermediate Elliott impulsive wave, which started from this low here. We have the first impulsive wave here and the second impulsive wave, and the third one here, the fourth impulsive wave, and the fifth impulsive wave. So this impulsive movement here is I can count it as a complete 5 wave impulsive move, and we have a WXY exit correction pattern here, which is we can also count it as an A, B, C to W, and here to X and Y, WXY pattern here. But I'm using a WXYZ pattern because the X and the W wave here and the X wave here, the second X here, it's not overlapping, so it's safe to assume that this is a W3 wave correction, because if you see it here, back in April 2021, we have A, B, C to W here, and we have an A, B, C to X here, and an A, B, C to Y, which is A, B, C to W here, and we have A, B, C, D, E to X here, Elliott triangle pattern, and we have A, B, C to Z here. And from this Z point, we have another impulsive move, which I counted as this is the first wave, the second wave, and we have the third wave here, the fourth wave, and the fifth wave, back to November 2021, when Bitcoin hit the all-time high, which around $69,000. And right now we are in the correction from the 69 high here. We have a WXY correction pattern, and I can assume that we have already bottomed out here in around 18 June, around $17,500. I can assume this is the bottom based on this double corrective pattern WXY here. Inside this WXY, of course, we have an impulsive move to the W wave here, which including an A, B, C corrective pattern, and also an A, B, C and X, Y here to an X, and we have another impulsive move to the Y wave here, which is close the complete the corrective movement here. And right now in this bull case scenario, we are in our direction to another impulsive move. which is, in my calculation, it's if we look at the monthly time frame or the weekly time frame, it's I can assume that this is a movement to complete the third impulsive wave, the third primary impulsive wave. From we have this 1 2 set up here, 1 2, and another 1 2 set up here. Okay, well, this is not really a 1 2 set up because we can actually count this here as a complete first wave, and this is the second wave here, and also this is the complete 5 impulsive movement, and we are in a correction, and right now we are going to have another impulsive move up. So yeah, with that being said, I can assuming that the correction is done here in the Y wave here, and we are going to another bull market run, maybe after September, or yeah, maybe in the middle of September or in the end of September. Now let's go to the 4-hour time frame. In the 4-hour time frame here, as you can see, we have a WXY corrective pattern from 69k. I'm going to hide this first. Okay, now inside this WXY we have an impulsive 5-wave move, okay, and an ABC correction, and another impulsive 5-wave move here, and ABC WXY pattern here, ABC to ABC X. The X can be right here, or it can be right here with ABC, and the Y wave here, and another ABC with an extended ABC pattern. So we have a WXY pattern here to this X. If we see it, this is the W, and this is the X wave here in the daily time frame, and from the from the X wave there we have an impulsive move down to the 5 here, 1 2 3 4 5, and complete the Y wave here of this correction. And right now we are in our direction to another impulsive move up. So here, let me show you. Inside this bull run, I assume that we have micro first impulsive move with complete 5-wave movement here. I can assume that this is the first wave, okay, and AB with the overshooting B to the second wave here, and if we want to set up to the third wave here, and the 4th wave here, and the 5th wave here, which is make this whole pattern here the first impulsive move. And what after the first impulsive move, we are having a correction. I mean, like a really big correction. So this price drop from around August 15, it's actually normal, because assuming that we have a complete 5-wave impulsive move, we are going to have a correction. Or I can assume that this is a 5 impulsive movement, and you can also assume that this is a leading diagonal impulsive movement, which we have 5 impulsive movement inside the leading diagonal. But I can also assume that this is a complete 5 impulsive move, because first if we calculate it really the third wave here is actually reach more than 1618 target here. So this is, we can assume that this is because this high here as the third wave, because it's taken the 1618 Fibonacci retracement here, and and also the 4th wave here is 0.618 Fibonacci drop to 0.618 Fibonacci retracement, which will be the ideal target for the correction for the 4th wave. So I can assume, and since this 4th wave here is not overlapping with this first wave, then this is the valid move. This is a valid count. It's a valid count. We have I can assume that this is the first wave, and ABC to the second wave here, and want to set up to the third, fourth, 5. This is a valid count. So you like it or not, we have a complete 5 impulsive move. That's with that being said, also that's will be explaining why we are having a correct down movement here, where when people hoping that the price will keep going to the third wave here around 28k, but the price is just going drop. But because we already complete the first impulsive move, we have 5 complete move, and we need the corrective pattern. So yeah, that's my assumption. And right now, based on this scenario here, we have an ABC correction. Let me show you this. Then we already finished the A here, which inside the A we have 5 impulsive move, right? The first one here, the second one, the third one. Oh, sorry, not okay. Within this A wave, we have the 1, 2, 3, 4. Oops, sorry. We have this 1, 2, and 3, 4, 5. Because this 5 wave here is actually lower than this third wave here, and this is a valid 5 wave impulsive move, and we have an ABC corrective pattern to the B wave here. If we take a look, if we take a look, if we zoom in, okay, we can actually find this as an ABC, okay, with lower C here, and we have an ABC to X here, so an ABC to, we can assume that this is a W here, and ABC to X here, and we have an ABC to Y here. So this, I can assume that this is a WXY pattern here to complete the B wave here, and the B wave is also already complete. And now we have another impulsive move to the C wave here, and by looking at this impulsive move, we can assume that this the C wave already complete here. Look at this, we have a nice, the first impulsive wave here, okay, 1, and this is the second wave, and we have 1 to set up here, or we can also assuming that this is the first impulsive move, and this is the second wave, and this is the third wave here, the fourth wave here, and the fifth wave here. It's really valid. It's really a valid count as an impulsive move. Consider that we actually travel, the third wave actually travel right to 161 Fibonacci retracement here. So this is a valid count, and we have the fifth wave right almost hit 0.382 Fibonacci retracement from the third wave. So yeah, and what do we expect after an ABC corrective? An impulse. We are going to have an impulsive move up to complete the third wave. So we are now in our direction to complete the third wave. That's the bull case scenario that I have in my head. So right now here we have the first impulsive move with the parabolic channel here. This is the first one, an ABC corrective pattern, and we are now going an ABC corrective pattern here. We can count it as the second wave. Okay, ABC corrective pattern to the second wave, and right now we are going to the third wave here. The third wave will be the biggest and the longest impulsive move, bigger than the first wave. So how do I calculate it? We can calculate from the starting point of the first impulsive move to the corrective pattern here. The target for the third wave will be somewhere around 32k. So with that, only with this 32k hits, we can assuming that okay, this bull case scenario can be in play, and we are not and also that the 17,500 here is the bottom, because if we actually reach this 161 Fibonacci retracement, okay, sorry, let me We have the 200 here, the first impulse is 200, okay, and this one here is 500. Yep, so it's around 31.900k here. And I believe it will hit, the price will push forward to this 32.900 dollar here, because this will also the mark the W wave from the corrective pattern there. So at least the price, this third impulsive move overlapping this W wave here, then we can assume that this WXY pattern from the 69k is valid, because because the third wave is already overlapping the W wave here, or the first impulsive wave down. That's what I have in mind. So let me show you this. Okay, that's the bull case scenario. Okay, so right now, assuming that we already complete the C wave here, and we have also we have a bearish engulfing candle here. This is a bullish engulfing candle here, and also by looking at the RSI here, we have what you call it, bullish divergence. So we have the lower low and the higher low in the SI. So and this one is a big divergence, you know. So yeah, it's a big divergence. So from this point we have 13.94 RSI number, and this point you have 20. That's a bit engulfing pattern, divergent sign. So yeah, assuming that we have this and an engulfing candle and a divergence in the RSI, so we can assume that the C wave here can already be incomplete, and we are going to our next impulsive move to complete the third wave. So that's the bull case scenario. Okay, now let's go to the bear case scenario. Since the bear case scenario, I have actually two bear case scenario here. In the daily time frame here, okay, it's the same. We have the first impulsive move, 5 wave complete. We have a correction here, A, B, C to W, X, Y, and 1, 2, 3, 4, 5 to another impulsive move. And right now, here we are in a W, X, Y, X, Z pattern. So let's go to the 4-hour time frame. Okay, in this WXYXZ pattern here we have actually two scenarios here for the bear case scenario. We have two scenarios for the bear, which is K, we complete the WXY pattern right here, and we are now going to WXY, the second X of this corrective pattern here. And in this second X wave, we can assume that the the X wave already complete right here in 25k 200, which we have an ABC correction to W here, an X here, okay, impulsive to an X, and an ABC with an extended ABC to complete the Y wave here. Okay, so this is the WXY pattern. So in this WXY pattern right here, we can actually also conclude that this is an ABC to W, ABC to X here. So this is W, X, and Y here, ABC with an extended ABC pattern to complete. So we have an WXY pattern. And after the correction, we are assuming that this X wave here, this X wave right here, oops, sorry, that this one, that the X wave here already complete, and right now after the X wave here already complete, we are going down to the first impulsive move. Yep. So let's zoom in. Okay. In this first impulsive move, we can assume that this first wave here is already complete, since we have a 5-wave impulsive move right here, and we have a small ABC. So we have the first wave, the second wave, and we are now in our direction to the second wave. So if we calculate it very closely, so okay, use this from the X wave here. Oops, sorry, and from the height of the Y wave here. Okay, so we have this as our completed. This will be our target, so it's actually reached the 1618 Fibonacci retracement. The impulsive move down here is reached the 1618 Fibonacci movement target, which is also the ideal target for the impulsive move down. So we can assume that this is as our first wave right here, and this is not the second wave right here. So this is the first wave right here. Okay, we have the first wave already complete here, which around $19,500, and we have 1, 2, we have 1, 2, 3, 4, 5 here. This is an extended 5 movement to complete the first wave here, and right now we are in the corrective pattern. So remember, after the impulsive move that reached the 1618 target, we are going to have a big correction, like an A, B, C corrective pattern to complete the second wave here, and which is the target will be around from 0.382 to 0.618 Fibonacci retracement right here. With this 0.382 Fibonacci retracement is also a golden pocket from this impulsive wave down. This is the golden pocket. It's around 23,800. So it's not a surprising movement if the Bitcoin actually back again to 23,800. So in this scenario, for the bear case, we are going to have this A, B, C corrective pattern to complete the second wave here, and after that we are going to having another impulsive move to the third wave here, which is from this. We can count the target for the third wave here is somewhere like here. So we can count it from this high here to this low here, and from the assumption target of the second wave, and the third wave will be somewhere around 14k. So yeah, with that being said, we are going to complete the what you call it, the Z wave here in for this bear case scenario. Okay, so this is the first scenario that I have. Okay, and there is also another scenario for the bear case, like this one. So in the first scenario for the bear case, I already assuming that the X wave here is already complete. So yeah, but in this second bear case scenario here, I assuming that this X wave here has not been complete yet, and we are it will be complete somewhere around here, and try not to overlapping this W wave here. So it's like a 5 impulsive move, 1, 2, 3, 4, 5, something like that. So in this scenario, the second bear case scenario here, we have actually an ABC corrective pattern here with ABC corrective pattern to W right here. So assuming that this is a complete 5-wave move, okay, we can assume that this is an A. So inside an A wave, we have a 5 impulsive move. So right now we have a complete 5-wave move here, 5 impulsive move right here from 1, 2, 3, 4, 5, which is make this an A, and we have an A, B, C to B here, and we will be having another impulsive move to C here. Okay, but since this we have many pattern, A, B, C to an A here, and A, B, C to B here, and A, B, C with an extended A, B, C to C here, then we can assume that this is a corrective pattern, A, B, C to the W wave here. Okay, and you can also mark it as an A wave, but inside an A wave we just another impulsive move to the A wave, so it's better for me to calculate this, since I have an A, B, C correction wave here, I can mark it as a W wave, so it's valid, that's not breaking any rules. So this is a W wave here. Oops. So this is the W wave here. Okay, and we just complete the X wave here, which inside this X wave we have an A, B, C, okay, or an impulsive move to an X wave with 1, 2, 3, 4, 5 here. And right now we are going to complete this, the Y wave from this corrective pattern WXY, and also complete the X wave here from the WXY, X, and Z. I hope you understand what I mean, what I'm saying. So yeah, so something like that. So then in this scenario, we assume that the X here it has not been complete, and the ideal, because if we're using the WXY corrective pattern, the ideal target for this X wave here is somewhere around 28k. Okay, let me show you this. Sorry, I mean this. So we have the third wave here and the second wave here. Yeah, it's somewhere the 161 if you burn to the first one, somewhere around here. It's 27 kilo. This is the ideal target for this correction. It's actually somewhere around there. Yeah, somewhere around that. 28, 29, around this. This is the ideal target for yeah, for this X wave here to be complete. And also maybe after we have this the last correction to complete this X wave here, we are going down to complete the Z wave right here. To complete the Z wave here. Whoop. Okay. Now for the target of the Z wave right here, let me show you this. Okay. So we have the target for the Z wave here, which is from this Y wave here, okay, of the first height. Oh, sorry, I mean for this first completed 5 wave to the first wave. We having target for the Z wave is somewhere around 7-8k. Let me just assume something like this. So let's, if this is correct, yeah, this is correct, because it must be correct, okay, you know, to make the price really valid. And to this height here around 69, 68.9. Yep. Yeah, we have this around somewhere around here, 161x. So the Z wave will be complete somewhere around 10k or $8,800. That's why I mark this as a impulsive move down 1 to the third wave, the fourth wave, and the fifth wave. Okay. So the only way for this bear case scenario to be invalid is that this bull case scenario right here, that I show you this here, must be in play, because that's the only way for the bull to be able to move higher, because by overlapping this W wave here, okay, by overlapping this W wave here, the bear case scenario right here cannot be valid anymore. Okay, but see, if this X wave right here still somewhere below this W wave here, okay, so the price might be able to drop anytime, you know. Yeah, I know it's less likely, but the possibility of the price go down to feel this Z wave here, or the fifth wave here, the last wave here, is somewhere around 30%. Okay, still somewhere around 30%, which is not make the bull run slightly. So around 30%, yeah. So it's, if the Bitcoin price actually move higher to around 28k or 29k, yeah, the possibility of the bull market run will be around 70%, and the bear market run will be around 30%. With that being said, that's that's the possibility that we have. Okay, so yep. Right now, in this yeah, right now in this corrective pattern here, I can say that the possibility between the bear and the bull scenario that we have here is somewhere around 50-50, you know, because the price will be moving in one direction only, and will be forming a one pattern or one wave pattern only. Okay, and no matter what, if the price going up or the price going down, from this point of view, from this point here, this point price right here, right now, the bear and the bull case scenario might still be in play. So for the bull case scenario, we have this point right here around $18,900 to be hold. So as long as the price still hovering above this $18,900, the bull case scenario still likely be in play. It's still 50% be in play. We can still assuming that this is just an ABC corrective pattern, but this is the first impulsive move, and this is the second wave, and we are now going to have the third one. Okay, so that's why I'm telling you that we still have a 50% possibilities of the bull market to be able to happen, and also for the bear market we have a 50% possibility for the Bitcoin price to drop lower. Why? Because even if the price going back up, we still have this scenario for the bear market. Okay, it's just a bear market rally. You know, if the price going to fulfill this Y wave right here, it will be another hammer right here, and it will be another bear case rally like this one, bear case rally. Okay, the first impulsive move, bear case rally. Okay, now we are going to complete this Y and bear case rally. So the possibilities between the bull scenario and the bear scenario is still 50-50, 50% against 50%. So what's more likely, if the bear actually able to push the price right below this $18,900, okay, and it moved to the support right here, okay, trying to retake on the latest low of this June 18, around 17,500. Okay, in that scenario I can assume that the bear and the bull case scenario will be somewhere around 70 to 50, 70 to 30. Okay, the bull case scenario might still be able to be in play as long as it doesn't retake this 17,500. But also, if I can say that if this price, if this line over here is broken, then the possibilities of this 17,500 will be retake is far more likely. So yeah, and also for the bear case scenario. So if the bull able to push the price higher than 32k, okay, if the bull able to push the price higher than 32k, which is the lowest price from this first impulsive wave down here, if the bull able to break it, to reclaim this point, then the bull case scenario will be somewhere around 80%, and that will be good. Okay, so as long as this price still hovering above 18,800 or 900 and still hovering below 32k, the bull and the bear case scenario here will still be likely to happen with 50% possibilities. So that's what I'm talking. That's what that's what I have in mind. Yeah, that's my assumption. This is the X already complete here. So inside this X we have a double. We have the an A right here, a B right here because this is the highest, and C. A, B, C. Okay, for the bear case scenario and the bull case scenario. And we are now going to this Y wave and this bear case scenario. Let's put it right here. Okay, so what I prefer this bull case scenario right here. So we have a complete 5 impulsive move. It's more likely, I think, to be in play. We have the first wave and A, B, C to the second wave here, and another impulsive move up. So yeah, this is more likely for me. Let's go to the daily time frame and make it. Let's hide this. Okay. So we have this as our first impulsive move. The first one right here. The second one will be complete right here. Third one, okay. The third one. The third one will be somewhere around here. Okay. And how about the fourth one? The fourth one, of course, it will be somewhere around this. Hold it from 0.382 to 0.618 Fibonacci retracement, and of course we also will have the fifth wave, which will be somewhere around 0.50% Fibonacci retracement or 0.61 Fibonacci retracement. Okay, something like this. This is for the bull case scenario. Right here we have complete first wave. We have the first wave complete here and the second wave complete here. And the third wave, the fourth wave, the fifth wave somewhere around here. And let's put it here in the bull case scenario. Yeah. Which will make this, if this scenario actually work, it will make this 5 complete impulsive wave here as the first wave. If we look at the weekly time frame. So that's it. That's my update for today. I hope you can understand what I'm saying or what I'm trying to say. Yeah, so for the signal I'm going to give you today is you can wait for the price actually to break above this trend line here, this descending triangle right here. Okay, and then wait it for retest, and you can open buy, or you can actually open a long position right now, since I'm actually already open a long position since the price dropped to around 19,580. So if you it's really good to measure this. Okay, with your target will be somewhere around here, around 32k. Oh, that's a bit 60% gain. Okay, and your stop loss is in this. Your stop loss is right here. Around 18,800. Yeah, so you have a 4, so you risk only 4% to aiming for 67% gain. Okay, so inside this scenario, and 60%, you can actually take profit 3 times. The first one will be right here, 22,500. If the Bitcoin price is able to reclaiming this high that marked with the B wave here, then we can assume that this is the first impulsive move. Okay, the first micro impulsive move, somewhere around here, and you can take profit here, somewhere around 22,500 or 23,500. Okay, maybe to wait for the correction, and the third impulsive move will reclaiming this high here. That's what I have in mind. Okay, but if you take maybe take a 50% of your profit somewhere around here, and then wait for a correction, and the correction must be somewhere above 2,600. If the price drop below it, then we might, no matter what, it's still an ABC correction, even if the price still wanna go and drop. Okay, so yeah, that's what I can share with you today. So okay, hope you like my update. Remember to read the disclaimer first. This is not a financial advice, and I'm not a financial advisor. So if you would like to use my suggestion for your trade, feel free, but do it at your own risk, and do your own research first before you. Don't blame me. That's your money. You do whatever you want with your money. Okay. So yeah, I'm Nnael. Thank you very much. If you make it this far to this video, thank you very much for having me here. I hope you learned something, and don't forget to hit that like button if you feel like this video, and subscribe and hit that notification bell so you won't miss any update from me. Yeah, bye bye.